Well, welcome everyone. Thank you for being here. This morning or this afternoon, we're going to be talking about banking and why it's important and what the difference is and how can we learn. And we have Alita Smith here from Excite Credit Union. Welcome, Alita. Thank you so much. My name is Vanessa Muniz and I'm the SparkPoint director. We provide as financial capability services to students at both City College and Evergreen. Also we provide services to the community. So our services are not only for our college campuses, but also for community. We help financial coaching, learning how to strengthen your financial muscles, as I like to think of it. And we're really just here for you. One thing that I do want to mention is that we're also providing free tax preparation assistance. So if you or a family member or a friend need help with tax assistance, please visit that Linktree link for more information on that. This year, there have been a lot of tax law changes and you could be eligible for additional resources from the California Earned Income Tax Credit, which is a new resource provided to California wage earners. So feel free to reach out. We have volunteers that are available to answer any questions. We are hosting counter hours Monday through Friday from 12 to 1, basically open invite if you have any tax questions. Okay, with that, I will take it away now. All right, Alita, are you ready?
I am ready.
Okay. Thank you, Alita. Welcome.
Thank you. All right, everyone. Thank you. Yeah, thank you for coming. I know Mondays are hard, so I appreciate you for being here. Today, we're going to be talking about the importance of being banked. All right, and this was already mentioned, but if you have any questions, please put it in the chat. Thank you. We're going to talk about the history of banking, the different barriers, and the importance of choosing wisely. So first, I want to go over the types of financial institutions there are. There's commercial banks, which are like Wells Fargo, Bank of America, Chase. You see these pretty much everywhere you go because they have multiple branches throughout the United States. And then there's credit unions like Excite, Santa Clara Federal, West, SFQ. These are your local credit unions. You're not going to find them if you go out of the state unless they just happen to have the same name, but they are community-based. And then now you have internet banks. You have Charles Schwab, Discover, Capital One, and there's so many others that you can access online. So those are just the types of financial institutions that we have currently. So what is a credit union? To be honest, I did not know what a credit union was until I started working for one. So it's not always common knowledge, but credit unions are not-for-profit. So what that means is after all the expenses have been paid, then all the money that we have extra goes back into the community. And that is in the form of lower no fees, higher interest rates on accounts, or better interest rates on like vehicles and so forth. Compared to a larger commercial banks, they are for-profit. So that means, you know, any money that they get, it goes to their stakeholders and not the people who are actually banking there. So credit unions, when you become a member, you are like part owner of the credit union. So if something were to happen, that means that it would whatever funds are available would be distributed throughout for the members and not stakeholders. So that's kind of the main difference between a bank and a credit union. All right, so FDIC and NCUA insured, what does that mean? So when you go into a commercial bank or a credit union, one thing that you want to look out for is the signage that will basically tell you that your money is insured. Now, they legally have to post this. When you walk into the institution, it's going to be pretty much everywhere in the window, on the counter. And that just basically lets you know that your money is going to be insured up to a certain amount, which is usually $250. So basically, this means that your money is insured when you bank with this institution. So if you walk in and you do not see this sign, that means there's a chance that your money is not going to be insured, meaning if something were to happen to the bank, your money is gone. You know, you're not going to get it back because there's no insurance. So you want to be careful with that, especially when you're banking with internet banks, because I honestly don't know who insures their money. So be very careful with that. All right, so we're talking about banking today. So we're going to be talking about what is it to be unbanked or underbanked. So traditionally, if you're unbanked, this means you do not have a checking or savings account. You do not have a prepaid card of any sort. You most likely use cash everywhere you go, so you leave no paper trail. And you're most likely invisible to credit bureaus because you don't have anything to record. And if you're underbanked, that means that you probably have a checking or a savings account or a prepaid card of some sort. You know how to use, a plastic, right? But you are also still utilizing alternative financial services. So what is that? Check cashing, money orders, payday lenders, and other alternative financial services. And so now I'm going to reshare my screen. I want to watch a couple of minutes of a longer documentary. It's called Spent. It's actually created by American Express. It's a really good documentary. It's about 45 minutes long in total. But I want to just show you a few minutes of that. Let me know if you can't hear it.
We've all had to wait a couple of days for a check to clear. It's because when a bank clears a check, it has to be scanned, verified, and processed by a system that was built in the era of rotary phones. Most Western nations have found faster ways to clear our funds, but not the U.S. So Americans have to wait.
3 to 5 days from now isn't acceptable for tens of millions of Americans. If your light's going to go out tomorrow, you need to be able to have that clear now.
I'm not exactly sure when it's going to clear, and I have to pay my bills. You go to the check casher, you get the money back minus the fee. You have that money in your hands right at that moment.
It's not an irrational choice. It's just not a productive choice, and it's a costly choice.
Underserved Americans spend the same percent of their income on fees and interest as the typical American family spends on groceries. That amounts to $89 billion a year.
And you are all set.
As a way to avoid fees, Alex and Melissa decided to live on cash.
We have cash on hand, and that's the money that we have. This is all we can spend. So when the money runs out, that's it. On payday, it's getting to the places so I can get the bills paid on time.
Hi, how are you?
Good. I'm here to pay the power. Thanks so much.
Take care, not a problem. Have a good one.
Being unbanked is really something like having a part-time job.
I probably spend quarter tank to half tank gas, driving around and paying bills.
You're going to spend more money and more time doing things that people who are in the banking system take for granted and usually do for free. You go to a check casher, you are automatically having to pay somebody to get your money. Now you want to pay a bill. Well, you have a wad of cash. How are you going to pay your bill?
How you doing? I just need to put some money on this card.
Money is becoming more and more digital, which means there are less places that accept cash. That makes life for the underserved even more expensive.
We have prepaid debit card, and the money that's on the card is real cash. It's cash that I directly hand to people, and they turn it into fake money for me. It's convenient, if you don't have a bank account, you can still do everything everybody else does, but you get taxed.
Justin not only pays a fee turning his checks into cash and his cash into a card, he pays a fee for every purchase he makes.
There's the transaction, and there's a buck, and the transaction, and a buck, and a buck, all the way down the board, man, it just kills you. Very quickly, you can lose $80 a month cashing your checks and another $100 a month spending your money.
Over the course of his career, Justin could spend up to $40,000 just to turn his paychecks into cash, and another $30,000 using his card.
And that's just not how you get ahead. It's not how you think about the future.
That's basically, it's a really good documentary, and I would definitely recommend it if you're interested in it. It really does bring up some really good points, but I will go back to the presentation now. All right, so One of the biggest things about banking that's worth mentioning is that banking has a history, right? And so redlining also played a part in this. Who has access to the banks, right? Or the credit unions, or whatever the case may be. Basically, it was segregating, right? So the neighborhoods were divided up into specific categories. And basically, the green and the blue represented the most desirable neighborhoods. And then you have the red and the yellow, which were the undesirable neighborhoods or the declining neighborhoods. So this was in the 1930s. This is when it took place. So of course, San Jose is a lot bigger than this now. But back in the day, this is what it looked like. So you see that we have a lot of yellow and a lot of red, and not a whole lot of green or blue. So that means that these areas were the most desirable. The blue was still a working class neighborhood. People would still consider living there. The red are the areas that they would want to stay away from. And this is where the poorest of the poor live. So people of color and so forth. Pretty much if you were of color, you were in one of these neighborhoods because they did not want their property to decline. So even the presence of one colored person declined their property value, and they did not want that. And so this is why they have redlining. And even though this was a very long time ago, that concept it still exists in some ways. And that also plays a part in access. Who has access to the banks and the credit unions? Okay, so I'm going to go back to the presentation. And I'm going to kind of give you an example. So I just did a quick Google search. I don't know if you guys are familiar with Saratoga. Saratoga is pretty well off. And then I have East Side San Jose. So I check cashing in Saratoga. As you see, the closest one is in Campbell. So there's no check cashing in Saratoga. But if you Google the same thing for East San Jose, you can see how the dots are a lot closer. There's one on Alvin Avenue, there's one on Story Road. So of course, these check cashers, these payday lenders, they're more accessible in under-resourced neighborhoods because that's where the money is. They know they could take advantage of these under-resourced communities, and so they do, as opposed to them being in the well-off neighborhoods where people don't need them because they have access to other things, to other, they have access to money, right? And to banks. So this is just something to think about. Does anyone have any questions about this?
I have one quick question. So does that mean that usually bank will not have their branch at the redlining, red and yellow area?
So now, well, back then, yes, they were financial deserts. Now you will see Wells Fargo or you will see Chase, but they're still not as common as they are in well-off neighborhoods. Yeah, because typically if you're in one of these neighborhoods, you're more likely to be unbanked or underbanked, meaning you're going to need these other services. And so they know that. And in a way, they prey off of you. So that's why there's so many of them, especially within a short space, because there's still profit to be made. All right. So just going into the traditional banking system, checking accounts, right? Just like we've seen in the video, if you are not in the banking system, this means that you do have a part-time job. I mean, because you're paying in cash or you're paying prepaid debit card. And a lot of times these prepaid debit cards will charge you to use them, charge you to load money on them, and so forth. So you're going to be spending money on a lot of different fees. But if you have a checking account, it allows you easier access to your money, like direct deposit. So if your job offers it, that means you wake up on payday, it should be in your account, right? You don't have to go and get your check and then go cash it and then, do whatever you need to do. And it also helps you keep track of your money and your purchases because you have, your transaction accounts or your statements that you could look at. And also we talked about it being your money being insured, right? If you have cash, you lose it, it's gone. So checking accounts really do have its benefits. And I know entering the banking system can be scary if you feel unprepared, but hopefully if you have any questions about it, we can address them today because it is a good thing to have. Same thing with savings accounts. And we talked about savings on Friday, but if you weren't here, we were talking about the importance of, saving for emergencies and saving in a safe space, which could be a bank or a credit union, because again, your money is insured, as opposed to you saving at home. And if something were to happen, again, your money is gone. So where do you go from there, right? And you can keep track of all of your money via an online app, right? So again, it's the convenience of having a bank and bank accounts. So what is the standard? So typically banks and credit unions will require someone to be 7 to 18 years old to open your own account. So if you're under this age, typically you would need an adult of some sort to basically help you open this account, and you'll be under them. The initial deposits, usually the checking and the savings are open together, and usually that's about $25 per account. So you need to come prepared with at least $50 so that way you can actually open your accounts. And then you also need your photo ID and a proof of address if it's not on your ID. So you want to make sure that when you go, you have the proper documentation, so that way you're not having to go back and forth, because that puts a damper on the whole process. So you want to make sure that you're going prepared. But I also want to tell you, this is the importance of doing research, because you never know what exceptions may be out there. If you go with the first bank that you see, you don't know what else is there, right? So you want to at least get a few options. Do your research. If you're like interested in Wells Fargo, see what their limits are, see what minimum balances are necessary to avoid any fees. Look at Wells Fargo, and then now you know about credit unions, so hopefully you'll throw a couple of credit unions in there. But you want to make sure that you are comparing all the features, especially if there's something specific that is important to you, right? So research. And just as an example, I always talk about our Jumpstart account, which is an account that children 13 plus can open. And you're not going to find that at just any institution, right? So it's just about doing that research and then finding it. At a traditional bank, you can open just a checking, but typically people open them together because they want to also encourage savings. So they're like, hey, get a savings account. But again, it's up to you. When you go in, you can just tell them, I just want a checking account. Now with credit unions, you have to open a savings, because that is our membership account. So you can't just open a checking at a credit union. You have to open a savings. Does that make sense? So it depends on where you go. All right, so now I want to talk about the different barriers to banking, just so you have them in mind, especially if you're not at that point yet to where you have to make these decisions, or, if you are in that current situation, what can you do? So one of the barriers to banking can be your credit. So if you have bad credit, you have derogatory credit, something's going on, it could bar you from getting a bank account. And this is because they usually will do like some sort of credit check on you just to see what's going on. And if there's any red flags, they'll let you know, like, hey, we can't open this account for you. And I will tell you, credit unions, we do a credit check. So if you do apply and you have derogatory information on your credit, it could deter or it could stop you from opening a regular checking account. But with credit unions, we also have other products that you may have access to, even though you may have some things going on with your credit. But just know that it could be a barrier. So you want to make sure that you take care of your credit. So it plays such an important role in pretty much any and everything that you will do in your life, from bank accounts to trying to get a loan to rental applications, everything. So you want to make sure you take care of it.
So Andy has a question in, let me see if I understand correctly, Andy, and correct me if I'm wrong. Are you asking whether your credit impacts your ability to open a savings account? Is that what you're asking?
Well, if you're looking for an account and they're going off of your credit and you have bad credit and they're like, we're just not going to open any accounts for you, that's where it could affect you. So it could be a barrier to opening an account, your credit score, or not so much your credit score, but like if you have derogatory information on your credit report. Does that make sense?
I think so.
Yeah, so say you had, you missed all of your credit payments on your credit card and you're overdue on your loan. This raises red flags. So when they look at your report, the bank looks at your report, they're like, if we give you a savings account or a checking account, you probably will overdraft it and you'll skip and we'll lose money, right? And we don't want to lose money. So we're just not going to give you a checking account until you can fix this and prove that you could actually take care of it. Okay, awesome. And so separate from that, credit bureaus, there's another reporting system, and that's check systems, and they monitor only your checking and saving activity. So if you have a savings account and you did something and now you owe them money, this will be reported to check systems. If you overdraft or put in a bad check in your checking account, that will show up in check systems. And so once you're in check systems, unless you take care of whatever is happening, you will be in the system for 5 years. So when they check, they automatically do a check on check systems as well. And so again, if you have any derogatory information out there, it raises red flags. They're like, okay, this person owes $700 for bounced checks at this bank. So they're like, we don't want to give you a checking account because you could probably do the same thing to us. They're like, how do we know that you're going to be responsible? And they don't, based off of the information they found. So they will decline you to get a checking and a savings account. So again, this is why it's so important to not just take care of your credit, but to take care of all of your accounts, because remember, you are building a relationship and they are tracking you still. Yeah. And then you have the overall lack of trust. A lot of people just don't feel like banks are being transparent. They don't feel that they're honest, and they feel like, okay, they're just like out to get money. And so this is one of the major barriers that financial institutions face. And this is why a lot of people are unbanked, because they just aren't meeting that trust that people need. And so this is also why credit unions exist, because we are for the community. And so part of what we do is try to reestablish that trust and get people banked. And so it's hard work, but it's something that we still need to do, because we need to let them know that we're there for you. And this is important. When you're not in the banking system, you miss out. You miss out on a lot, and you end up paying for it because you're spending so much money to access these other services. So, but long story short, no matter what institution you want to go to, or whether it's a credit union, whether it's a bank or some other private institution, you want to make sure that you're choosing wisely. And it's important to be empowered, because remember, it doesn't matter if you have $70 or if you have $7,000, this is your money and it is your decision on where you want to put it. A lot of times I've heard people going into banks and they're like, I just to open an account. And so they did. And it's important to know that if you're feeling that way, it's probably best to just turn around and leave. Because you should not feel pressured. That's not what it's about. I do understand that commercial banks, usually they do have quotas that they have to meet, right? But at the same time, if they're unable to answer your questions, if they're unable to make you feel safe and comfortable, then that's probably not a place that you want to bank with, because again, this is a relationship you're building. And it's up to them to really establish that rapport. And if they're not, then just look elsewhere, right? And so when you go into these banks, you want to know what to expect. Ask them, what are your monthly maintenance fees? What are your fees for bounce checks? What's your overdraft requirements, right? It's okay to ask these questions. You want to ask these questions. Get the fee schedule, right? I know if you want to skip the monthly payment for Wells Fargo. I think it's $500, but Bank of America has a $1,500 minimum, right? So each institution will be different. And it's important that you know what's going on depending on the institution you choose. So that's pretty much the presentation. So if you have any questions about banking or anything of that nature, please let me know because I'm here to answer your questions.
Alita, I have a question.
Yes.
Can you talk a little bit about what is an overdraft fee and how are those calculated?
Yes, so it's not really like how they're calculated. It's kind of just like a set fee. So basically, now you can't, they don't just opt you into overdraft anymore. You have to actually enroll yourself. But basically, overdraft protection is you're out and you swipe your card, but you actually don't have enough money in your account to cover it. But they allow the transaction to go through anyway. And so once that happens, they actually will charge you a fee because they're like doing you a favor. But some people will do it because they don't like the embarrassment that they may get from, a declined card. But again, you will be paying for it. And those fees can be $25, it can be $35 per transaction, depending on the institution.
And Alita, I had a question. It's Jackie here. For sometimes there's credit unions that have hidden fees. Can you speak more on any hidden fees that you've come across on or any complaints that you've had before?
I haven't had any particular complaints about credit unions' hidden fees. And I want to be really honest, they're not hidden, they're usually in the disclosure. But people do not read the disclosures. And so then when they actually get the fee, they're like, oh, I didn't know about this. And it's like, they legally have to give you a disclosure, right? And it's in there. So this is why you want to read, because it's going to tell you the whole story. But I know that usually when I contact people, I just let them know, for example, if you want an e-statement mailed to you, we charge you $2. And so this is why we encourage online banking and paperless. We tell them hey, if you don't sign up for it, you will be charged. That's just to cover the paper and the ink and stuff. And so we try to avoid that by being upfront with them. And that's really our only extra fee that we have.
So yeah, I think Alita's right. It depends on the credit union, and every credit union might have a different fee structure or charge for different things or not charge for things, charge for membership. So it's definitely, if you're interested in opening an account with a certain credit union or even bank for that matter, you should ask before you sign, okay, so what are the fees? What's the true cost of banking with you? And they have to provide that to you. And if they want your business as a consumer, right? I always push, you have to really think about yourself as a consumer and being a smart consumer and making your money work for you. Where do you want to invest your money so that that your money is then working for you in the long run? So having those questions is really, really important, and really understanding the product that you're engaging in and the relationship that you're trying to establish with that that banking institution is really important to know as well. Any other question that anyone might have?
Yeah, any more questions about anything?
What is the most common fee bank usually charge, so we can have a list of the thing we know where to look at it or when to ask, what to ask? We know the slides already show 3 of them, but I just want to know what's the most common fee bank will charge.
Yeah, those ones are the most common. So the monthly maintenance fee. And so if you can get around that, you want to know how. And then you have the overdraft, which are very common because people, you just swipe. And so they will charge you. Then bounce checks. If, a lot of people are not everyone is writing checks now, but still those are pretty common. And those ones are the ones that add up the most. So those ones are the ones that you want to make sure that you're aware of when you go. And if you, and I would say if you can, don't get overdraft protection. And that's just because, again, they're going to charge you, but you know, if you go and you get that decline, it's better than having to pay $25, right? And that was really, really the most common. And that brings the bank a lot of revenue. So.
I would also ask about, so like if there's a minimum balance that you have
What
to
about
carry.
like ATM fees, those using
fees,
other ATMs?
Right. Yes. So yes, using other ATMs that are out of network. Alita, I don't know if you want to talk about the network that credit unions have.
Yeah. So we have a co-op network. And so what that means is, yeah, we're our own credit union. You can use our ATMs, but you can also use any ATM within our network, our co-op network. So that includes other credit unions, that includes mostly ATMs at 7-Elevens, and then there's some other ones that may be sprinkled around. But I always lead people to the app. Like if you have the app, you can always put in your zip code or your location. It'll tell you where the free ATMs are. And those are the ones you want to go to. If you go to Bank of America, your card may get declined in the ATM just because it won't take that. And I've had that happen before. So, you know, just make sure that you're going within our network. And also, even if you're not here locally, but you're somewhere else, and like San Francisco, for example, when you go to San Francisco Federal Credit Union and you want to make a deposit, you can make a deposit there for your Excite account. So we all use a similar network, so we can do that.
Yeah, I have my credit union's in Fresno, and I do all my banking here in the Bay Area, and it's pretty easy. I mean, I can't go into a credit union branch, but I can use the ATM to transact, to make transactions. So super convenient, and I don't pay anything. Any other questions?
Oh, also I think Excite Credit Union has the take a picture of your check and you're able to deposit remotely.
Yes, mobile deposits, we do have that.
We also have another question was submitted earlier. Can anyone get account at credit union?
So credit unions have a field of membership. So it will be different for every credit union. For us, we have 6 counties within our field of membership. So you can live, work, or worship in Santa Clara County, Monterey, Santa Cruz, San Mateo, Alameda, or San Francisco. So if you're within our footprint, you can become a member of Excite. And then every other credit union will have their own field of membership as well. So that's another difference between a credit union and a commercial bank, because commercial bank, you can just be from wherever and, you know, get an account there, right? But credit unions, because we want to stay local, we have a smaller footprint.
I had a question.
Oh, go ahead, Julie.
About the child saving account.
Mm-hmm.
So I read online that it wasn't or withdrawals are not allowed. So when would you be able to take out all the savings that are accumulated? When like the child turns 18 or?
Yes, when the child turns 18. So it is a strictly savings account, and that's why the threshold for your deposits are so low, because we know that it's not always easy to save, right? But we still want it to be doable. And so, you know, but it is definitely just a savings account. But if you are turned off about that, you can use the other child savings account, where you will have you'll still get the $50 deposit, but you won't matching. The matching are for the people who are like locked in and they're like, we're serious about saving, right? So, but there's another alternative if you're scared of the other one.
Right. Thank you. I'll consider both.
Yeah.
Thank you, Alita, for your time, and thank you for sharing the wealth of information with us and our participants. We have our virtual counter hours where you can come and ask questions. If you want more information about SparkPoint, about the resources that we can connect you to, As Gina mentioned, our services are free. We're here for you. We want to make sure that you have everything at your disposal to make smart financial choices and to be a smart consumer. Have a fabulous weekend. I mean, not weekend, week ahead of you. I wish it was a weekend. Have a fabulous week ahead of you. And thank you all for coming.